If you invest in a project that you believe in it in the long term, why not compound your additional yield through staking, lending it out, giving other people liquidity, but in return, you're essentially generating additional yield for tokens that you own. So I had a question come up in another call. What are the best staking providers for their Bitcoin? And stakingrewards.com lets you kind of shop the whole market, analyzes the different returns platforms are offering. So I click on this tab over here called staking providers. And the question I had was, for DeFi protocols, right, decentralized finance, who are the top projects in terms of yield and total value locked on their platform? Well, these are the top 3 projects that shouldn't come new to you are Yearn Finance, Compound, and Avee. The top 3 projects that have locked over billions of dollars in liquidity and are offering, up to 8% on your coins. And some projects are insured by other insurance companies, so other crypto insurance projects, or they're insured by liquidity within their own project as well. Insurance means that if something were to happen, like if a company were to get hacked, their database were to get hacked, your money will be refunded to you and you won't lose that. There are some projects where people invest into where it's not insured. They loan out their money, and when the project gets hacked, they lose all of their money. In order to have insurance, you're kind of guaranteed to not be prone to that high risk downtime, or a project, let's say an owner decides to kind of destroy whatever happens within a project. There's some projects in the past, like in 2017, where they completely stopped running the project and that project is completely wiped. At least you have insurance on your money. So staking, some people have asked me, what are the best ways to generate yield on, let's say, their Bitcoin, right? Bitcoin is one of the most obviously traded assets in the whole space, but maybe they want to generate, instead of just holding Bitcoin in their wallet, maybe they want to compound additional interest and yield on their Bitcoin. If you go to this website and you just click on Bitcoin, you can not only see the live chart price analysis of Bitcoin, but you can also see the top providers where we could filter by rewards and see that, these top 5 providers here can help you generate from 4% to 16% yield on your Bitcoin. But these providers here, for example, BlockFi giving 5% on your Bitcoin, there are other projects in the crypto ecosystem that can give you higher yield on your Bitcoin, but they're essentially more decentralized protocols where it's a little bit more advanced and you have to, gets into wrapping your Bitcoin into a non-native address. All projects are different. I can speak specifically to one of the most popular decentralized finance projects called Avee, where you don't have a minimum duration of locking your token in, but you're not going to generate the yield unless you obviously leave your token in. So let's say the token is a 30% APY. That 30% is weighted based off holding your token there for essentially, let's say, a year. So when you actually think about it from a monthly perspective, that yield can be generated or broken out into like 5% per month. Now, if you do unstaking, let's say you want to pull your money out, you're going to be prone to what's called the lockup period, where it takes 2 days for your tokens to come back into your wallet, but you're no longer staking it. Those are a couple, learning curves that you have to get used to when you participate in this. Avee is its own protocol, and however you interact with Avee, you technically could interact with it through an exchange or through your own digital wallet. Okay. Avee is its own company itself. What Avee has recently released is partnered with a project called Polygon, where you can basically do gasless transactions and gasless lending. Basically what they're doing is they had a $40 million partnership with Avee, and Polygon's now paying you to borrow money from them. So let's say you borrow money at a 6.7% rate. You're going to get paid back from Polygon, same company. You're going to be paid back 13% just from borrowing money from them, in the sense that they're incentivizing you to participate in their DeFi lending flash loans. Where with a friend the other day, where he's borrowing money from here, getting paid to borrow the money, and then the money that he's borrowing, he just loans it out again. And he just keeps doing it over and over, where it's super risky. If the price goes down, you're going to kind of liquidate yourself. But there's a pretty good opportunity where you can play around with stable coins, money that doesn't change, deposit and get a more positive yield on it, but also borrow and get additional positive yield on it. So you're basically getting paid to participate and learn about it, all for the cost of zero gas. But when we're talking about the Aave in general and just the Ethereum network, I know people that are just holding stablecoin, like their stable US dollar, whether it's US coin or DAI, and just leaving it 50, let's say you have $50,000, you're just leaving it in your wallet, but you don't plan to touch that at all. Why not put that capital to use? And just through depositing it, you're going to be generating 4% return on it. And that 4% return, if you highlight your mouse over, it tells you, it represents how much of these rewards you would earn during a 1-year period. Your risk is if you're lending a stable coin, your coin doesn't go down. The price doesn't fluctuate when you lend a stable coin. But the risk is the opportunity cost of not investing that stable coin into a project that's going up. So essentially it's based off your risk assessment. Would you rather just be one of those investors that invests like a 401k and not worry about the price essentially going down? Or would you rather invest that money into a project that's a bit more volatile? It's all based off risk assessment and how you want to participate as an investor. For me personally, I wouldn't want to put 50,000 DAI and lock it for a year. I'd rather take 50,000 DAI and spread it into projects that I've researched a lot into, because I know that I can beat a 5% yield. Stablecoins, basically, it's pegged to the value of the US dollar, meaning that it's never going to change in value from $1. Maybe it'll go to 99 cents, maybe it'll go to $1.02, but it's a stable coin that doesn't fluctuate. So you can really leverage stable coins where, let's say you're really scared about a crash, you can just convert all of your tokens to stable coin and wait for yourself to get more comfortable before you're ready to invest again.